Zach's Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Well, this week we're going to talk about increasing sales and profit margins with Kevin Matras, our screener here, top screener at that.
I'm a screener. I'm an inanimate object.
This must be an earnings season coming up because you do this almost once every earnings season, right?
Right. Close enough.
Yeah, so third quarter earnings season must be close at hand.
Right. You know, earnings season actually is 3 weeks away, and I think...
October 11th, right?
Yeah, they kick off with Alcoa after the close. Anyways, the reason why this is important is because, you know, earnings really is the most important thing to a company. Without earnings, there really wouldn't be anything else to analyze. And earnings growth numbers will show you how the company is doing. However, Joe, just because sales are increasing, that doesn't necessarily mean that your profit margins or your profits are increasing as well. So it's really, really important to know that sales at the expense of profits does not work, and that is why profit margins are so important to look at.
So how do you define margin?
Well, let's take a look at a definition, okay? Margin is simply a ratio, and the calculation is net income divided by sales. So, if a company's margin is 15%, for instance, that means the company's net income is 15 cents for every $1 of sales the company makes. Now, if a company's expenses are growing faster than their sales, this will reduce their margins. So in general, a company who is seeing their margins increase, that means the company is earning more for every $1 of sales the company makes. It also shows that that management is doing a better job because they have their costs under control. So I would say this earnings season, and really any time, but definitely this earnings season, you want to take a look at a company's sales. You want to take a look at a company's earnings, but really dig into the company's margins. Are they making more money for every $1 of sales they make, or are they making less money for every $1 of sales they make? And this is very, very important. And also, too, this could be the deciding factor as to whether or not you buy a company's earnings announcement or sell it. If you see a declining profit margin, that could be a warning sign that that costs are getting out of control, and you may want to think about, you know, coming up with an exit plan.
All right, so show us how to find those increasing margins.
Yeah, here's the screen. The first thing we are looking at is we are looking at the 12-month trailing sales growth, and I'm looking at the current quarter of the trailing 12-month sales growth versus the quarter ago, 1 quarter ago. And we want that to be greater than the relevant median for its industry, okay? Basically, that just means we are looking for the top companies in their industry when it comes to the sales growth. Then I want the current net margin to be greater than their 5-year average net margin, so I want to see their margin rates better than what they have been in the past. Next, I want the current net margin to be greater than the net margin from 1 quarter ago. So again, if a company's margins have fallen in the previous quarter, usually that means you may see those margins fall again. So I would prefer to see those margins increase. There's a higher probability they will maintain or increase again. So we're excluding any company where their margins have fallen in the most recent reporting period. And then I'm applying this stuff to companies with a Zacks rank of a number 1. These are strong buys. Essentially, I just only want companies with the strongest Zacks rating to pass through this screen. And typically, I will apply my parameters to companies that are trading over $5 a share with volume of over 100,000 shares traded on a daily basis.
And what companies did pass through?
Bunch of awesome companies came through. Here is 5 of them. I think just the way this screen is laid out, I think there was about 80 companies. Wow. So you may want to throw in a couple of other parameters to narrow this down. But here's 5 cool looking stocks. We've got CROX, Domino's Pizza, Interactive Corp, Lululemon, and Select Comfort. A lot of different industries here, but all of these companies look great based on all of the things we just talked about, and all of these companies are going to be reporting earnings within the next couple of weeks.
Do you own any?
At this particular point in time, I do not have any of those.
Always have to qualify that, you know. And as always, you can find a text version of this week's screen on our homepage, Zax.com. If you're not there already looking at this video, scroll down the homepage until you see Kevin's picture, and the headline next to it will take you right to the text version of this week's screen. And if you want to find out more about the Research Wizard, the software package, the tool, the powerful tool that Kevin uses to achieve all of these screens, then Zax.com/researchwizard is the place to go. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.